Hey, I'm Patrick Manning, Chief Revenue Officer at Rock Financial.
Can you guys see me? Hear me okay?
Hey Ryan, what's up, man? Can you hear me?
Yep, I can hear you just fine. Can you hear me?
Awesome. Yep, I got you loud and clear.
Perfect.
Awesome. We're just finishing up some setup here, some lighting, some streaming stuff. So we'll be live in just a second or two.
Sounds good. I'll hang tight. All right, grab some water. I'll be right back. Are we starting right on the dot at 2?
Yeah, we'll get started right about 2:00.
Perfect. I'll be around.
Perfect.
Camera's on. Can you guys hear, see me okay?
Hey, sorry about that. You should be able to hear me now.
Yep,
Perfect.
loud and clear.
We're just making sure we can get everybody to see both of us. So we're
Okay.
just getting the camera going here. All right, all right. Can everybody hear me and see me?
Yeah, I can see you just fine.
Ah, perfect, perfect, perfect. What's going on, man? How are you?
Doing good. I'm pumped for this webinar.
Yeah, I mean, we've
Did you
done.
see this?
Yeah, I love that. I love that. I'm gonna need one of those quarter zip actions right there. What do you got, a North Face on or something?
I do actually. Abby sent it to me, and so I was like, "Oh, I just got this," and I was like, "I'm gonna rock it for this webinar."
I love it. I love it. I love it. I thought I was gonna see you
Uh,
in the hat. Um,
I
awesome.
normally sport a hat, but yeah, I thought
Yeah, yeah,
today just do something a little special.
yeah. Love it. Love it. Love it. Um, so as we get going, guys, we're gonna give it a few more minutes here, let people join. But Ryan is our director of equipment finance. So he runs everything that has to do with equipment. He's been in the equipment industry for a really long time, so we're excited to have him share his knowledge today. But you'll see it'll be a lot of back and forth between Ryan and I. We'll do a brief presentation, nothing too crazy. We'll highlight some success stories. But more than anything, we want to create engaging conversation. So allow this to be the first of many times that I invite you to utilize the Q&A feature here on Zoom. We're going to continuously monitor the Q&A so that we can pull live questions out and get you guys some real deal answers. But just as we're getting going today, if anybody does want to be heard, I will tell you right now that we're starting at the very top of the Q&A. We'll work our way down. We'll answer as many questions as we can. And we'll give it another couple minutes here just as we get going. We got a lot of people joining. We had well over 500 people register for this thing. So definitely want to make sure everybody has the chance to join. Really quick, Ryan, where in the world is Ryan Chen today? Where are you?
I'm actually overseas in Asia, in Taipei, Taiwan.
Wow, wow.
Yeah.
Not jealous at all. No, I'm just kidding. No, we're super excited to really just dive in here. The one thing that I want everybody to know is rock is all over this world, right? Like Ryan is a testament to that, where it really doesn't matter where you are. What it matters is what you know and what you're able to apply, right? You'll see a lot goes into what we do and how we do it, and we'll certainly be diving into a lot of ins and outs of equipment finance today. But one thing that is for certain is, regardless of what business you're in, regardless of your industry, regardless of your background, you can certainly make a living in this industry and utilize all of the different products to help do so. As we get going here, I always like to kind of start the same way, with who you are, where you're calling in from, and whether you're currently partnered with Rock or not. So really quick in the Q&A, if you don't mind, you can if you don't mind dropping in to the Q&A, where you are, where you're calling in from. We're super excited to have everybody, that's for sure. I see there's a couple questions already about whether this is being recorded. Absolutely. You can certainly find the recording. Anybody who registered will also get a copy of today's recording as well as the presentation. And we even included a really cool feature, the equipment list at the end of this presentation. So everybody will have access to this. I see Brian and Jeff calling in from Portland, Oregon. George down in Georgia, recovering from brain surgery. Shout out to George. I hope you're doing well, man. I see we got Toronto, Canada, Tijuana, Mexico, California, another California, Canada, Key Largo, Florida, Tyler, Texas, Dwayne out of Los Angeles, Mary from
Got a couple people from Arizona, Phoenix,
yep.
Mesa.
Yep. Love it. Love it. Love it. This is this is our thing, guys. If you've never been a part of our webinar, thank you for joining. If you've been on one of these webinars, welcome back. A little different for us today. We got Ryan joining us. Ryan, just remind everybody where you're calling in from. What time?
I'm coming in. It's 2:00 in the morning.
Oh, so it's already the 22nd where you are.
It is.
Where are you, Ryan? Just one more time.
Yeah, I'm in Taipei, Taiwan.
Wow.
Yeah.
How long you been there? Last time we spoke, you were there as well, right?
Yeah, I travel back and forth here and there, but primarily stay out here for the most part. Now going on 3 or 4 years.
Love it. So just to kind of get going here, guys, we're not gonna make this thing too crazy. We'll get diving into the presentation in just a second here. But as we get going, a couple quick housekeeping things. If you are looking to get your questions answered, we've enabled the Q&A feature for that. It just really allows for us to really dive into what are the most valuable questions, so we're not getting too many duplicates or having to answer the same thing twice. So please feel free to utilize the Q&A. I see a lot of you guys already did. Shout out to everybody who has. We will be sharing this recording with anybody who registered, so feel free to log off if you have to. You can always watch the recording. We're going to send out the presentation at the end, but we will certainly be getting going here. And I just need to, am I sharing am I presenting? We're in presenter mode? Okay, cool. Sorry. Just had to get permission from the marketing girls that we're all good. Really quick, like Ryan mentioned, he shouted out Abby. I just want to shout out the rest of the team that helped put this thing together. The marketing team, especially Christina, Lauren, Marilyn, for really, putting together such a rock star presentation. And without further ado, we're going to get rocking, guys. So I am Tony Cimino. I'm our VP of Business Development. If you've never been on one of these webinars, congrats to you. If you have, I'm sorry. No, I'm just kidding. Welcome back if you have, and thank you so much for joining us. One thing that is not lost on me is the audience that we have. So shout out to you guys for joining us. We're already over 100 participants. But if you need to reach me, here is my direct line, my direct email. You might even get some emails from Tony C at. That's not my real email. That's an alias. That's a marketing thing. You can have the real one today. And then, like I said, Ryan is our equipment finance manager. Ryan, give us a little bit of background on you, man. How long you been in equipment?
So I've been in the equipment financing going on in this industry going on about 20 years. I've helped about, I want to say close to 10,000 small businesses finance over $250 million worth of equipment. And I've been all over the place. I've been not only at a few different lenders and broker shops, but also vendors as well. So I bring a wealth of knowledge to this industry.
Let me ask you a unique question.
Sure.
Ryan's been with us for a few months now, but there was a little bit of a courting process that went down. Where we were trying to see, is there a fit amongst you working with us working with you? What was it that caught your eye, or what was it that you realized, like, hey, I want to be a rock star?
Yeah. So what really impressed me about Rock is its ability to reach out to a whole different set of partners, bring on those partners, and then offer a lot of value in terms of the types of products that are on offer in our suite of products. Not only on the merchant cash advance, also on the working capital, but more recently with the addition of commercial real estate, asset-backed lending, things like that were covered in the previous webinar with Steve Rodriguez, who is also a rock star, super bright, and has been around the commercial finance industry for, I think, just as long as I have, if not longer.
Yeah, one of the things that isn't lost on me is that you guys chose to work with us. Like I said, you guys have been with us a few months now, so you're definitely a part of the team and a part of the family. But just to get a chance to circle back to some of that courting process, or even right beforehand, is always fun, right? Because at the end of the day, you guys have a ton of experience, a wealth of knowledge. You could do this on your own, but you chose to become part of the Rock family. And you know, that's exactly what our partners have done here. They've all partnered with Rock because they see value in working with us, right? And that's where I think just diving into our story for a second is super unique. Anybody who doesn't know us, we've been in this industry 15 plus years. We were initially started on the working capital side of things, like Ryan was touching on, with term loans, lines of credit, the merchant cash advance being the main product. And then as we were in business for 10, 12, almost 15 years, we started to realize the need for other products. I mean, I funded my first equipment deal with Rock in my first few months in the business back in early 2017. And I realized then that, you know, it's not just about our core products. There are some ancillary services, for lack of a better term, that were out there, and we were able to get some deals done. It was a cool time where, you know, we had some cool relationships with other brokers who were helping us get some deals done. But nothing really too formal. You know, if you're a partner on this call, you might have even funded equipment with us in the past. You might have even funded some factoring deals with us in the past. Well, the only difference is the formalization. And if you've been a partner with us, you get that that's really everything. You know, as far as process technology goes, we're the industry leaders when it comes to being a partner. So when you start to get this flip side of things with equipment or you know, commercial real estate or any ABL product, it was unique for us that we weren't as hands-on or we weren't as knowledgeable. So we had to go find those people. And shout out to Steve and Ryan who head up those teams and those divisions, because they are true rock stars. This is what we do. This is how we do business, right? So the evolution of our business was, we were once specifically marketing driven. Right now, 100% of our business comes from people like everybody on this call. And you may be saying, well, why, right? Why is it that they are partnering with you guys? And I promise I'll let Ryan talk. He's just going to do most of the talking about equipment. So I'm going to get through my slides. He's going to get into his. But Ryan, feel free to interrupt anytime, man.
You're doing great.
But why do partners choose Rock? I appreciate it. It's really a variety of reasons. People, process, technology are at the top. You know, I saw a question earlier about the portal. How do I get access to the portal? You can reach out to your point of contact. We can certainly get you access to the portal. If you are not a partner, you can certainly reach out to us to become a partner. You could go to rock.biz/partners. But that's certainly the easiest way. Reach out to your point of contact. They'll help you reset your password, get into the portal. What's inside the portal? Well, the portal is like, it's the area where you become part of the team. There's everything in there that you would get access to as a Rock sales rep, you get access to as a Rock referral partner. So marketing materials, custom landing pages, all your real-time statistics, your existing pipeline, all of your historical funding data, your commissions, all of that lives in our My Partner portal, which is powered by Salesforce. So you're getting access directly to our CRM. You can leverage our brand, our relationships, and it really does create a system where you can extend all of these products directly as an arm of your own, right? You can do this as much or as little as you'd like. And what I mean is, you can be as involved or uninvolved as you'd like. We have partners with us who are brokers of these specific products, and they'll refer us a client when their traditional lenders decline a client. And when we get them an approval, they take that approval, they go out and sell it just like they were working with a direct lender. There's other people that will generate a lead, nothing but a name and a number, refer that over to us. Our sales process will take over from front to back, get the deal funded, and ultimately get the customer what they're looking for, right? At the same time, we're also going to help our referral partners create more business, close more deals, and get them paid for doing so. So that's really the whole system. Now I'm going to take a step back. And Ryan, you gave an awesome, quick insight definition yesterday as we were talking and getting prepared for this. I don't know if you remember exactly what you said, but I said if you could drop that on this slide, it would be a great way to segue into equipment.
You're going to have to remind me of what it was, but if I can think back, I think it was just talking about just the sheer size of this equipment financing industry. We can go to the next slide on this one. So a lot of people don't realize that the equipment financing industry is such a tremendously large part of small business finance. So just last year in 2022, over $1.1 trillion of equipment was purchased. Now, the vast majority of small businesses, about 78%, yielding about $858 billion of equipment is financed via loan, lease, or line of credit. And the reason being is that there's a lot of advantages for small businesses to utilize equipment financing. So this would include things like, tax savings or cash flow optimization, plan against equipment obsolescence, right? And so, when people hear the word equipment, they think about a construction site, right? You'll think about cranes and cement mixers and trucks and trailers. And while that all is equipment, every single business that you can think of needs some sort of equipment. So as an example, when you walk into a Starbucks, you don't realize that there's about $100 to $150,000 worth of equipment behind the counter, right? You're thinking about the blenders, the coffee machines, the ice machines, the panini press, the display case, the digital signage, the point of sale terminals. All of this is equipment. More importantly, it's equipment that can be financed. And so, there's a tremendous amount of opportunity here. As long as this equipment is essential to the business, we can finance it. One caveat to that is that the only type of equipment we don't finance is anything that flies or floats, right? So planes we won't finance. There's other companies that do that. We won't do anything that floats like a boat for insurance purposes and tracking purposes. But other than that, if it's essential to that business and it makes sense, then we can finance that for that business.
No, and that's the biggest point, right? Like you mentioned, is being essential to the business operation.
That's right.
And this goes well beyond some of the things that we'll talk about on some of the future slides here. But like, let's call a spade a spade. It doesn't really matter what type of business. It more matters what type of equipment, right? In terms of, hey, there's thousands of different kinds of trucks, right? You got box trucks, tow trucks, trailers, semi trucks. You got a lot of different types of trucks. You could simply be talking about the truck that a foreman rides around in all day. We could be talking about an F-150, and essentially, if that foreman is going from job to job and it's his way of getting from job to job, that is essential to that business. That business owner can take advantage of equipment financing to put that F-150 into the business to get this person going, right? So you may say to yourself, like, hey, is this really essential, right? Like you pointed out the point of sale equipment that's behind the counter at that Starbucks, right? Like this is things that we don't necessarily think of. You think of Starbucks, you think about the cup of coffee you end up with, not necessarily how you paid for it or the signage that they had or the TVs or, even the glass casing, right? Some of the glass casing, some of the display cases.
Display case.
Yeah. The refrigerated cases, with the cake pops, those things are pretty good. Know my way around those. But no, the real thing that you got to understand is when you walk into a business, pretty much everything that you see is equipment. The
tables and chairs, that's equipment.
Exactly. Tables, chairs, keyboards, all sorts of different stuff. So let's jump into some of the meat and potatoes here. What are some of the categories? There's a wide range of categories, guys. We touched on some of these, but you could be talking about printing and packaging. You could be talking about moving and storage. You could be talking about hardware and software in the technology industry. You could be talking about construction equipment or skid steer or a backhoe or a small forklift, you name it. And you could be talking about a retail store and the different rows and aisles of shelving that they have. Like all of this stuff is what we're talking about, right? So just to dive in, trucks first, right? My son would be proud. He loves his trucks. He would tell you what all of these look like. But this is just an idea behind what does this industry, and this is really scratching the surface. You'll see at the end of the presentation, there's like 25 slides, and shout out to Marilyn for this, of equipment lists that you guys can refer back to going forward. But this is just a quick idea as to what some of the trucks are that you can finance. Ryan, I'm going to let you jump back in here, man.
Yeah, real quick on the previous slide, for some reason we put on a tank. We don't finance tanks, but I think they meant tanker truck. So I just thought that was funny. We'll go on to the next slide. Yeah, it actually should be tanker truck. Anyway, so we wanted to share with you guys some success stories and some of the programs that are being offered specifically within equipment financing. So one of the things that one of the businesses that we financed a box truck for was a business in Chicago looking for 3 box trucks for moving locally and intrastate. On this one, what we were able to do is get them a 72-month term. Now, typically for equipment financing, you're seeing anywhere from 24 to 60-month terms. Now, 12 months is a program that we do offer. It's pretty expensive, but it is there for the customers that are looking for a shorter term. But in addition, on the flip side of things, we also do offer 72-month terms, which is outside of the traditional programs that are being offered. And so, if the company in this case wanted to minimize their payments, we were able to offer them a 72-month term.
Yeah, no, and what's unique about this too is the fact that it's not just new equipment, right? I just want to highlight that one section there, right? It's 1 new and 2 used box trucks.
That's right.
So with titled equipment, the titled vehicles, there will be some criteria around that. And if you have an opportunity, we can certainly dive into that with you. But as long as they meet the minimum mileage, or the maximum mileage, and they're not too old of a truck, we can certainly look at that. So just keep that in mind. It's not just brand new equipment, right? It doesn't have to be as brand new and shiny. Somebody could have used this thing in the past, and now you're getting a look at it, which could save you a substantial amount, right? Like just like a regular car, a truck, the second you take it off the lot is going to come down a lot in value. So keep that in mind as you're going day to day. It's not just new equipment, right? So another great industry, you use the Starbucks example, is the restaurant or food and beverage industry. You could be talking about fast food franchises. You could be talking about these coffee shops. You could be talking about 5-star steak restaurants, right? With gigantic walk-in freezers, or, I've even seen some where you get to pick out your piece of meat, right? Like all of this stuff is exactly what we're talking about, right? So you have all of these different pieces of equipment. But again, another quick success story that we wanted to highlight.
Yeah, so for this one, it's a restaurant in Texas, steakhouse. As you can probably imagine, they were looking for $100,000 worth of restaurant equipment, which included, fryers and ovens and commercial dishwashers and prep tables to prep, the meals. Now, what was interesting about this one was that they were so successful that they wanted to expand. So the expansion location, the original location had been around for around 10, 11 years under the same ownership. And the owners decided, hey, we want our son to have a location on his own to manage. So they decided to open one, just the town over, just about 15 miles away. And so normally in equipment financing, if someone was to take a look at the file and say, hey, this restaurant is a brand new restaurant, but we did a little bit of digging on our research, talking to the customer, we realized that they had an original location that we could tie in the time of business from the original location to this and extend it to this brand new expansion location. The caveat to that is that they had to retain the same ownership. They had to retain the same name. So it was the same brand, same steakhouse, but we were able to get them outside of the startup category that they normally would have been placed under and into an expansion restaurant and credit them that crucial 10 years time of business.
Yeah, I mean, especially with a restaurant, right? There's so many statistics that say X amount of restaurants fail in their first year or their first 3 years or their first 5 years. I mean, I've been in this industry for a long time. I work with a lot of people in the banking industry. I literally don't know of one bank in America that lends money to restaurants with less than 5 years in business, right? So this is a way for us who are a little bit more hands-on to understand the opportunity of the business, right? Essentially, if you go to the bank and you tell them, hey, I'm opening a new location for my restaurant and I want to take out money for that, they're going to decline you because it's a new location. That's instantly it. If you don't have 5 years of history at that location, it's done. So now you have to look elsewhere, right? That's where we step in and really hone in on, hey, it's a new location, yeah, but they got 10 years of history here that we can utilize to show that if there's anybody that's got some proof to being able to borrow some money, it's this scenario, right? So I just want to point that out that like, hey, it's not always about what's black and white. Sometimes it's that we operate in the gray that can really help out with a specific scenario. Another major industry is the medical industry, right? Some of these words I can't even say. Uh, but the real thing that I want to point out here is all of the different things that you see when you sit down in a doctor's office can be financed. Every piece of equipment that they're using. So keep that in mind as you are marketing this stuff or as you are interacting on your day to day. Depending on what your lead gen strategy is, that's how you can then go apply this information back. If you know that you're in a networking group and there's doctors in there, well, you can start to talk about being able to finance some of their equipment, right? And this is a really great opportunity here because what's unique about this opportunity is the customer initially came in looking for cash, right? But understanding what they were doing with the cash, we were able to say, hey, what are you doing with the money? And then boom, we were able to get them financing for the equipment. Ryan, I'll let you step in.
Yeah. So, Tony brings something up that's really great is that people just don't realize how much equipment is at every business, right? When you go to the dental office and you're sitting in the chair, you're not thinking that this chair is equipment that is essential to that business, right? In this picture, we obviously have a dental chair. There's tools, there's computers to, monitor medical records, patient records, and whatnot. The pneumatic systems, the water system, that filtration, all of that is equipment. In this specific case, the dentist rather was looking to finance 2 X-ray machines for their 2 practice space, right? And so they were looking for a 36-month term. But what's interesting about this is that he was a brand new dentist. It was a brand new practice, had never been opened or anything like that. And so similar to the previous example that we gave, what programs that we offer allow to credit the medical practitioner or the doctor to be to credit their time in business from the date that they're getting their license, right? And so even though he had not yet opened his doors, he did not yet practice on a single patient in this new practice, we were able to give him access to a program that credited him time in business from the time that he got his license. And so I thought that was something that we should highlight as well.
Yeah, absolutely. Because let's face it, a doctor's business is that license, right? Once they've said their oath, they're rocking and rolling, as we say, so it's awesome that we have programs that highlight that, right? Same thing on the cash side. Like there are programs out there in the medical space for those licensed professionals that they can leverage their licensing in order to get access to better rates and terms or longer terms, or simply just simply get approved because they are that type of licensed professional. They have programs that are specific to them. So definitely a awesome success story to highlight because it's such a unique industry. I always like to say, who doesn't like to lend money to doctors? We do it in all shapes and forms. We even have the ability to leverage their receivables through the insurance companies. So if you are somebody that works with doctors, dentists, veterinarians, anybody in the medical industry, it's definitely worth a conversation about how we support that industry, because there's a lot of different ways, that's for sure. And then technology, right? I always say technology is great till it isn't. At least we're all working right now. Ryan's on the screen. We got the presentation rocking. So technology is going for us right now, but there's a lot of different kinds of technology, guys. We were talking about it yesterday as we were, like I was saying, we were preparing, and I even said to Ryan, like, people don't realize like how big GPS has become in terms of like equipment financing, right? And just being able to track the piece of equipment itself, right? Some of these equipment financing agreements have that you have to have a specific GPS system in place, or a specific tier of that in place, in order for them to finance the equipment. Other ones, these pieces of equipment are so valuable to them, they want to finance 10 or 12 GPSs themselves to put it into their trucks or into the trailers or onto their pieces of equipment. So technology is everywhere, that's for sure. But
Yeah.
awesome success story here to highlight as well.
Yeah. And just to add to that, Tony, we say technology, and that extends to hardware for sure, but it also extends to the software that operates on that hardware. So there's a lot of specialty software specific to certain industries that we can extend financing to, whether that's a yearly subscription or even a monthly subscription. We can wrap that in as part of the package, because obviously the hardware is no good without the software. The software is no good without the hardware. Right. And so we want to make sure that we're packaging that in so that it's an inclusive agreement for that business owner. In this particular case, we financed some technology equipment for a post-production studio. This one was super cool for me because I'm, super into movies, and they were a production studio that produces movie trailers that you see at the beginning of every single movie. And so they have to keep up to date with the latest and greatest in equipment. They were looking for $150,000 for Avid. I don't know if you guys know what that is, but they're the ones that make the editing bays, where basically you see in audiovisual studio, where they have like the controllers that adjust the sound and color. Anyway, they're looking for $150,000 worth of audio video production equipment based in New York. And this one was on a 36-month term, but what was interesting about this one, it was actually a 3 plus 33. Obviously that adds to 36. So why split that up? The reason is because we also offer interesting programs to help the customer save money. And what I mean by that is this customer opted to have a 90-day deferral at the beginning of their finance agreement, so that they can get the equipment up and running. They can get trained on the equipment. It was new, and they didn't want to make any payments for the first 90 days because they weren't making money with this equipment, right? And so we put them on a 90-day deferral program. First 3 months, they didn't pay the regular program. It's just $100 as a contact and payment, so that the customer knows, hey, I still have this lease agreement. It's not like 90 days later and they're surprised with some sort of bill in the mail. And so it's just a simple $100 contact payment to the lender, just so that they know that this is ongoing. And then it allowed them to get the equipment installed, tuned to their specifications, and also trained on the equipment. And since they weren't making any money on it, we didn't charge them. But in addition to that, we have 90, 120, even 180 deferred payments. We have seasonal programs. Landscaping is a good example of that. When it's the winter months, they're not using the equipment, so why should they pay for it? So they can defer instead of being front loaded for that 90-day deferral program. We can say, hey, it's the summertime between November to February. You don't want to make your payments because you're not using equipment. We'll set it so that those 90 days you're not making payments. And so there's a lot of interesting ways creative ways to get these financing programs set up specifically and customized for these businesses.
No, that's really awesome. It allows a business owner to take advantage of the opportunity rather than being taken advantage of.
Sure.
The financing should support what they're trying to do. I always say dollars make sense, right? If you want somebody to pay you back for this equipment and not necessarily have to go get it yourself and sell it on a secondary market after they default on your loan, well, then you would want to set them up for success with something like this. So this is really, really awesome information that you can basically customize it so that it speaks to the business's cyclical nature, right? Or
Yeah.
just the fact that they are getting access to some new equipment. So it might be training and really getting up and going before that equipment even makes them any money. So that's
Yeah.
huge. Just
Yeah. In addition to that, we didn't, have a specific example for this just because we haven't utilized it just yet. But there's also step up programs. Though Tony was mentioning, hey, when a new business is getting started up or getting acclimated to new equipment, we have step up programs where we're stepping up the payments incrementally so that they're not, expected to make their full payments straight off the bat. Our goal here is to customize these programs and these payments for the customer so that they can afford it and really ultimately make money from the equipment that they're acquiring.
Yeah, absolutely. 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 We got some really great questions coming into the Q&A, guys. I promise you we're going to get to them. But I'm super duper excited for that. The one thing that we wanted to point out is if you see that equipment, Rock funds it, right? Again, there's a very long list at the end of the presentation that everybody will get of all different types of equipment that we fund. But if you can think of equipment, like Ryan was saying, that is essential to a business, and you have a business owner who needs funding for that equipment, call us. Let's have a conversation. That's what we're here for. Not that we're going to do every deal, but we're certainly going to give you the feedback about, is this deal possible or not? So just really quick, some overview, right, of the programs a little bit. I saw some questions about this already. What is the borrower profile? What types of credit profiles do you guys look at? Will you do startups? So here is all of that information, right? Our terms go out to 72 months. We'll do small deals. We'll do large deals. The one thing, Ryan and I talked about this a lot, that we wanted to make sure that we really hit home on was, what is the core borrower look like, and what does our core equipment finance client look like? And it's basically a mirror image of what it is on the working capital side, right? Our bread and butter, where we're going to do 85 to 90% of these deals, is $150,000 and under, and even $250,000 and under. If you have a customer that has a few pieces of equipment or one piece of equipment that they're trying to buy, and they're in business, they have some soft costs behind it. We'll explain what those are in just a second or two. You can get access to up to 100% financing, right? And that's what the beauty of this program is, when we brought Ryan on, we wanted to feel like, hey, this is the same Rock experience that we get, just in a different vertical. And that's what we've created, where there are multiple lenders who have multiple products that make up multiple different tiers within the product of equipment finance, right? And there's even different products. I saw somebody talking about sale leasebacks or purchasing equipment versus a lease of equipment, right? These are different types of products. We have access to a lot of this stuff, guys. So as you have these questions or these scenarios, the best thing you can do is give us a call and let's talk about it. As long as you see that it meets this information in front of you, it's worth a conversation to us and the team. That's for sure.
Yeah. Just a couple things to add to that, Tony.
Yeah,
the minimum deal size, and I've seen a couple questions come across. Our minimum deal size is about 5,000. If it's 4,000, not a big deal. We'll still take a look at it, and we can go all the way up to 10 million. But our sweet spot for financing is really kind of between the 75 to 250, right? That doesn't mean if it's less than that, don't submit it. Certainly, we want to take a look at everything. And there's certain times that you bring in a customer and they say, hey, I'm looking for this $50,000 truck. Well, do you need other equipment alongside that? Maybe it's a forklift. Maybe, if it's an automotive repair shop and you need a tire balancer. We sometimes will ask the customer, we'll always ask the customer what else they're looking to finance so that we can tack that onto that equipment finance agreement for sure, right? The beauty about equipment financing is that when there's multiple invoices, we can spread that across multiple lenders. And so that, you know, if, as example, a restaurant, right? There's restaurants that require a pizza oven from vendor one and a refrigerator from vendor two. We can either put that on the same equipment financing schedule or split it up so that A, we get the best program, but B, you know, that they're getting all of the equipment that they potentially could want.
No, it's a great point. Ryan, I am going to ask you one last question before we go on, because it's already in the Q&A here. What
Sure.
are soft costs?
Yeah, soft costs are things like shipping, handling, training of the equipment, right? And so it's not an asset that's tangible, but it's certainly part of that asset. And so a good example that I had mentioned earlier was that audiovisual production company. They had to be trained on that, and there's a cost associated to that training, right? They had to fly out a specialist, do on-site training for the company in getting it set up. Not only getting it set up, but training on how to properly use the equipment. So soft costs are just the stuff that aren't tangible.
Yeah, like you said, shipping, handling, installation, training, all of this stuff can be financed, guys. So
Right.
you'll see future success stories from us. There'll be an equipment value, and then there'll be a financed amount, and those will be different. That's based on not only soft cost, but also down payment, right? Sometimes there will be a down payment associated. Other times we're able to do 100% financing and the soft cost. So really understand what are the differences and how that makes sense for the businesses that are now borrowing this type of money, right? You'll see that others will talk about doing equipment financing, but will they be able to get up to 100%? Will they add in some of this soft cost? A lot of times you won't see that from banks or traditional style lenders out there, because they're going to finance that piece of equipment. The rest of it is kind of on you. Where you'll see this stuff is where we live, and that's in the more competitive market. You know, there are a few more lenders in the alternative space. They're getting competitive at one another. So this is good for the borrowers. This is good for us as brokers. We can sell these products. So keep that in mind as we really get going. Last couple slides here, nothing crazy. Always like to highlight our reviews and really encourage anybody who's new to this or hasn't worked with us to look us up versus others in the industry. Take a look at Trustpilot, Google, Best Company, all of the review sites that are out there. You'll see nothing but 5-star reviews about people who've borrowed money from us or businesses that have borrowed money from us, as well as partners who've referred us those businesses, right? These are real individuals who partnered with Rock. We have over 10,000 active partners at the moment. So it's really, really important to me that you understand it's not about us. It's about all of this. It's about all of the reviews and the people that we help, because that's what we do. We help business owners gain access to funding regardless of what they're utilizing the funding for. So this is the time, right, where now you can become a partner. It's very, very easy. I love this new feature that we're doing, where you just got to scan this QR code. My team, I promise, is waiting for you. I promise they want the phone calls. They're waiting to convert your leads. They're waiting to give you access to the portal. They're waiting to talk to you. So feel free to become a partner now. Feel free to follow us on social media. Feel free to become a rock star, because that's really what my challenge is back to everybody on this call is utilize Rock as much as you're able to. That's how we're best utilized. Put us to the test where you see fit. I'm more than hoping, and judging by some of the questions in the Q&A, I'm more than hoping that that equipment's going to be a big part of this. So we're going to just get wrapped up here. I think we got one more slide, because if you do want to call in, I gave you the phone number so that you can do it here. But this is the last slide here. Like I said, after this, there are a ton of different pieces of equipment that we will give you access to. I promise. We even do cannabis equipment. So all of these different pieces of equipment, right? We do all of these different types of equipment with all of these different types of deals. Let's dive into the Q&A. Let's see what you guys are talking about here and get you guys going. Really quick, I did see, shout out to my boy Barney. Barney, play like a champion today. huge supporter of Notre Dame football. So we're going to play like a champion. Barney, we're going to start with your question. What are some underwriting requirements for equipment financing? So I know we touched on briefly, what the terms look like, a little bit
Yeah.
how long the terms are and the different types of equipment, but what does it actually take, Ryan? Give me some insight.
Yes. So there's three things that we're looking for when a customer is looking for financing. First is how long have they been in business, right? And there's three different categories within that. The first one is what we consider a startup business. This is 0 time in business to just about 2 years. Growth companies are 2 to 5 years, and then established companies are 5 years plus. Chances are, if you've been in business for 7 years, you're going to make the 8th and 9th year, right? And so it's the early stages that are a little bit more wary, right? We're not sure if you're going to make it to the first or even second year, and the rates are going to reflect that, right? Because the risk, we have to adjust the rate to the risk. The second thing that we're looking for is what is the personal credit profile of the owners of the business. Now, it might be a little bit different than working capital, but we usually need 100% ownership disclosure of the business, right? So if somebody owns 70%, another person owns 30%, then we're going to need both owners, and we will need to take a look at what their credit profile looks like. Now, if they have several, delinquent payments, small collection accounts, medical collection accounts, that's okay. Typically, in terms of FICO score, we're looking for 550 and above. Obviously, if you've been in business for, let's say, 30 years and you have a 575, that makes it a lot easier than if you're a startup business with a 575, right? And the third question that we ask when we're underwriting is, what is the asset that you're getting? Does it make sense for your business? And the reason I bring that up is because, we've seen crazy things like, a doctor's office looking for an ice cream machine, right? Maybe they're serving it to their patients after, dental surgery. I don't know, but it just doesn't make sense for that line of business. So that's a hard no, right? We've seen crazy stuff, right?
Absolutely.
Yeah. And so those are the three things. Basically, A, how long have you been in business? B, what is your credit profile going to look like? And we are looking for not just the score, but we're looking for trade line depth, right? Do you have, installment debt? Do you have loans? Do you have credit cards, revolving, right? Different types of trade lines so that you can show, depth to your credit. It's not just the score, right? So oftentimes we have someone come in, they're 20, 21, coming straight out of college, and they have a 700 credit score. They're looking to open up a print shop, right? Like screen printing clothes. They're like, I have a 700 credit score. Why is my rate like this? Well, yes, you have a 700 credit score, but you have no depth to your credit. You have one credit card with a limit of $500 that probably your parents co-signed on.
Yeah.
Right. And so not only that, to add to that, you're a startup business. And so that's what makes it challenging, right?
Yep, absolutely.
And explaining to them, hey, this is the metrics that we're looking at and determining what your rate is going to be and what programs you have access to.
So just to be super clear, right, before we move too far on from the time in business conversation, because I got a lot of questions about that. How long do they have to be in business? How long do restaurants have to be in business? How long does an Apple run their business? So just to be super duper clear, like you use the term startup, right? Like that means they could just be getting going.
They could just be getting going or still in the planning phases, right? We've seen people who are a sole proprietor and just starting business today, so long as we prove that they have industry experience, that they've been doing this for a while, then sure, we can do it. No, not a problem. It's a pure startup. A lot of the times, like we were mentioning before, in the medical example, right? He hadn't even opened his doors yet, but we could prove that he had the experience by being, professionally licensed. Yep. So in that case, it's still a startup, but we were able to get him great rates. And so basically any customer that is looking for any type of financing, whether they're established business, startup, or in the growth mode, we can take a look at.
I mean, it's 2023, right? Costs across the board are extremely up. Doesn't matter what product you pick, right? specifically, I'm going to pick college for a second, because if you are a doctor, you've spent quite a bit of time in college, right? You might have even borrowed some money to go to school, right? So you could already be in some debt, right? Now you go out into the working world, and maybe you've even done your clinicals, you've now moved on and possibly even worked for somebody, but you want to work for yourself, right? You believe in this entrepreneurship or entrepreneurial spirit. You want to move on. Well, now you're going to have a major cost to start up your business, right? All of
Yeah.
the equipment that's going to have to be a part of that build out of your office, that's all going to be something that you're going to have to pay for. And you have one of two choices. You can pay for it with cash, or you can pay for it with debt, right? A lot of people just don't know how vast that debt topic can really be these days. You know, you mentioned like startups, businesses that are in the planning phase. Like, you know, when we flip to the working capital side, that's just simply not the case. We can't help like that. When you're talking about working capital, a business owner has to have a business checking account generating revenue for at least 3 to 6 months before we can help, right? Anything before that is a business that we can't help. But if they're purchasing equipment, we can. Why? Because we have access to the equipment financing side. So I just want to really hammer that point home, that like, it doesn't matter how much time you've had in business. Yes, it will affect things. Totally on the same page about that.
Yeah.
Same thing when you're talking about working capital, right? If you're a business owner that's been around for 91 days or 3 months and a day versus somebody that's been around for 35 years, we got a totally different business on our hands. So same thing in equipment finance. If you're just getting going, or you're still in that planning phase, it's going to be a little different. You're going to have different requirements. You're going to have to meet different criteria to get access to the funding, but it's available, which is totally different than any other product that's out there. Any other product that's out there in terms of commercial finance, you have to be doing the business in order to get access to the funding. This is where it's different. So I just wanted to really hammer that point home, because we got a bunch of questions around time in business. I thought it was important that we really just hit home on that one for a second. Just a lot of duplicates. How can we get access to a list of equipment? That will be in the presentation that's shared with you. Does Rock Financial offer refinance to existing loan products? Yes, we can refinance existing loans. Equipment's a little different. But if you're looking for cash, we can certainly refinance other debt that you have. There's also the SBA that will refinance pretty much anything as long as it costs more than your SBA loan. So I'm seeing a lot of repeat questions. Could Rock finance marketing and lead gen costs for a contractor? Absolutely. That would be a fantastic opportunity for us to get cash in their hand. They could potentially utilize a term loan, line of credit, cash advance, any of the working capital products.
Can I just add in something real quick, Tony? I saw a really great question from Aldo with regards to restricted industries,
Okay.
like attorneys or trucking. And so there is one specific industry. There used to be two, but there is one specific industry that we cannot touch, and that's the adult entertainment industry. And so this includes anything, certain venues, but also anything to do with gambling, right? So we can't finance anything that's considered adult oriented. Other than that, we're fair game, right? Maybe 2-3 years ago, cannabis started to open up with regards to different lenders. And, we have lenders within our network that specialize in it. They have pretty creative programs, that require a little bit more money down just because it's not federally recognized just yet. But we do have access to those now. But in terms of, what you're saying with attorneys, attorneys need equipment too. They need computer systems, they need software, they need copiers, they need office furniture, presentation equipment, telephone systems. So absolutely, we'll do financing for attorneys. For trucking, we do trucks all the time, box trucks, dump trucks, all different types of trucks. So
Absolutely. Really quick, I have one question that I have not seen, but I definitely want to make sure we touch on here. Can you touch on section 179?
Sure, absolutely. So Section 179 allows for the business owner to write off their monthly finance payment off their pre-tax income. And so obviously, this is something that they should have a deep conversation with their tax attorney or advisor on, but it's a way for them to actually uh, save on their tax burden at the end of the year. A lot of small businesses are taking advantage of this each and every year. You hear people buying, G class wagons or G wagons because it's over $6,500, £6,500, and writing that off at the end of the year, right, as a business expense. Same with like their F-250 or whatnot. And so everyone's trying to avoid paying taxes. The way you do that is acquire equipment and write off that monthly payment off your pre-tax income.
So let's just
We actually have, sorry, I didn't mean to interrupt, but we actually have, flyers that are going out to our partners and the business owners as well that we've prepared. I think there's a calculator link on there so they can say, hey, this is how much I'm paying in equipment finance, right? And this is how much tax savings I can see for the current tax year.
Yeah. So just to give you guys a quick right? Let's say you're a business owner and you have made 500 grand this year. So you have $500,000 in profitability essentially that you're liable to be taxed on, right? The way that it would work is if you were to go buy $100,000 piece of equipment, you have now spent $100,000 and still have to pay tax on $500,000 because you made 500,000. So even though you only have $400,000, you have to pay tax on all 500,000. Now, what's unique about an equipment finance piece is you keep your $500,000, right? But because you can finance the cost of that piece of, because you can write off the cost of that piece of equipment, as well as the finance costs associated with it, you can now claim that you only made $400,000 because your purchase of that $100,000 piece of equipment is going to be
Right.
a deduction on your overall taxable income or your taxable revenue, excuse me. So that's why it's so advantageous for a business owner to do this, is because now they've kept their cash on hand and they've gotten the tax savings on the back end. Regardless of whether you're talking equipment or any other funding for a business, any type of interest paid through the business for capital is eligible to be written off as a part of your tax savings. So definitely make sure you're communicating with your tax professional, accountant, tax attorney, whoever it is that prepares your taxes for you. But again, this is something that is available to all business owners. And those that are making money are looking to take advantage of things like this at this time of year. That's why I wanted to point it out. It's the end of the year. Businesses know what they're making or what they've made or what they're forecasting these last few months. They know what's up, and dollars make sense, like I said earlier. So if you're able to show them that they can get access to this piece of equipment, keep their cash on hand, and take a dollar for dollar deduction on that piece of equipment, that might make a lot of sense. So just keep that in mind as you're going through your day to day. There's also tax benefits to this. I see a lot of duplicates in the Q&A, Ryan. Things like,
Yeah.
are we providing access to this afterwards? The definitely a lot of different things going on within this presentation, right?
Yeah.
There's
one question I was hoping to answer if we have a few more minutes. It's by King Baldwin. Do most businesses have a relationship with their bank that can finance cheaper, or are we more competitive? And absolutely, there's competition in this space. The big banks, the usual suspects like the Bank of America, the Chases, the Wells Fargos, have equipment financing divisions. Where we stay competitive is not necessarily on rate, but on two things. The first one is speed, right? Like if I get an application in today, everything checks off. We may get bank statements, we may get financials. We can approve that, generally speaking, within 24 to 36 hours, provided that they've given us all the information, disclosed all the ownerships and whatnot. So comparatively, when you think about a traditional bank, they have access to all your financials, right? And so they're digging through every single part of your credit, every single part of the transactional history you've had with them. And so yeah, maybe they're going to provide a slighter rate than what we can provide, but they're not going to be able to provide speed, and they're not going to be certainly not be able to provide access to programs like deferrals, right? Like we had talked about earlier. And so, in terms of why small businesses choose to use us over them, speed, convenience, um, access to programs, but also not being captive to your business banking relationship, right? So if you're default, you can just go straight after your whatever money you have in your business bank.
Yeah, and just to take that a step further, this is a known fact, but 9 out of 10 applicants for small business lending at a bank get declined, regardless of their use of funding. So even on the equipment
Yeah.
side, 9 out of 10 can't go to the bank on the small business side. So, we necessarily, not that we don't concern ourselves with that 10% that can go to the bank, but we certainly focus on the 90% who can't go to the bank. So just keep that in mind that, a lot of our customers are people who are outside of the bank to begin with. A lot of times banks will decline you for time in business, for industry, for profitability. They're going to do a full bank underwrite on any one of these deals. It's not what's unique about us, and what's a little bit different is we're simply going to look at two things: the value of the equipment and the affordability of the loan. That's it. If you can afford the equipment, if you can afford the loan, and the equipment that you're telling us you're purchasing has the value that we're talking about lending you, it's a home run for us. It doesn't, like, unless you're talking about the roulette wheels, or any of the other gambling things, or any things that your imagination might be thinking of when we talk about adult entertainment. We're pretty much going to finance everything else, right? Ryan, ignore my roulette wheel request that's in your inbox.
Okay, sounds good.
Texas Hold'em's gonna have to hold off. But no, a lot of great stuff, a lot of great information. One of the things that we realized pretty quickly, I think, when we were putting this together, is any one of these little caveats we could certainly dive down a rabbit hole and probably create a whole nother webinar about, right? Somebody mentioned sale leasebacks before. We could do that. We could do one simply on 100% financing and soft costs. We could pick the cannabis industry and simply talk about cannabis equipment. But what we really wanted to do with today's webinar, guys, was give you hopefully a rock star intro into the fact that doesn't matter the type of equipment, you can get it funded, right? So I hope that everybody's pulling some value out of today. I hope that you guys got your notepads out and took some notes, and really took some value out of this thing. I want to say thank you to you, Ryan, for joining us here.
Absolutely.
Close to 3 a.m. now, right? But no, definitely excited to connect some of these partners that are going to have some of these transactions with you once we get hung up here. Anything you want to leave the people with before we sign off?
Yeah, I think, hopefully this was super informative for everyone who joined. If you do have other questions, feel free to reach out. Every single transaction that comes across our desk is going to get viewed by a person, and we are going to respond. So please send in those questions. As you learn this product and as you're approaching, your business network, we want to be able to help. And so feel free to reach out to us any way you can. Contact information's on the presentation. Presentation, again, is going to be passed around after this concludes. And you can reference this as a resource, leverage us as a resource to answer questions, and let's get rocking and rolling.
Absolutely. Love it. Love it. Love it. You guys are all rock stars. Thank you. Thank you for hanging out with Ryan and I this afternoon, or evening, or morning, or early morning, depending on where you are in the world. Thank you guys again. Thank you to everybody that put this thing together, and we will catch you guys on our next webinar. Thank you so much, everybody. Have a good one.
Have a great day.